All right, my friends, we're in a bear market, finally! The first time since 2009. And so all the negative Nellies are coming out of the woodwork, and that's fine. They do whatever you want. I want to share with you some stock market reality here today. It is December 24th, 2018. We are officially in our first bear market for the S&P 500 since the doldrums of 2009. And that's good. That means we can finally get back to what investing is about, which is being an owner of some of the best run companies in the world, companies that make your life better with the products they sell and the services they provide, that you can take an ownership stake, and as those companies prosper, you can prosper with them. Capitalism, ownership of stocks, is the best way out of poverty there's ever been in the history of mankind. It's a wonderful proposition. I don't take it lightly. I take it absolutely as a blessing from above that we have the ability, a regular lower and middle class Joe, to be an owner of a company and gain the profits that they make. It's a wonderful thing. That's investing. Speculation is not investing. Speculation is gambling. If you want to gamble, that's fine. Doing things on point-to-point, what's the technical analysis, the candlesticks, and all these different things that they use, the head and shoulders and all, that's not investing. That's speculation. Investing is, I want to be an owner of a company and take advantage of the company's growth, recognizing that as an owner, I can also lose my shirt. Thus, the benefit of capitalism and the risk-reward concept. So I want to show you something. I've heard this. I probably heard this before I even started my YouTube channel. I've heard it so many times. I don't know what it is with the negative people who are just I just don't get it. I don't understand why. Why are you so? It's the weirdest thing. But anyway, so I had a guy on my YouTube channel just today or yesterday, something like that, say, you should have said that if you invested in 2000, you wouldn't have made any money until March of 2013 or something like that. From 2000 to 2013. And I've heard this a million times. I don't get where this number is coming from. There's some guy out there who's saying you invested in March or 2000, you're not going to have made any money until 2013. I mean, I didn't get the memo. I'd like to know who that guy is, because I hear this all the time. And it's factually incorrect. I don't understand, unless they're not using dividends, but they never say like that. They said, oh, if you invested in 2000, you would have not made any money until March of 2013. I don't get it. I don't get it. So let's nip this in the bud once and for all. VTSMX, the Vanguard Total Stock Market Index. You cannot get any simpler than VTSMX. You just simply can't. I mean, literally, there's no market trading, no market strategy, no nothing. Just dumping $100,000 in there in 2000. I dumped $100,000. Literally, this is the worst, the exact opposite of cherry picking. This is the worst time to invest you could possibly have had. I am using that to prove to you once and for all that the naysayers are wrong. Now, what they should say is different, but they're not doing that because I don't get it. It's just odd to me. In 2000, here the red is what the markets did in the negative. The green is what the markets did in the positive. So the premise, again, if you would have dumped $100,000 in the market in 2000, you would have no money until 2013 above what you put in. Well, we'll see. To 2000, down 10.57. 2001, down 10.97. 2002, down 20.96. $100,000 of the worth $62,930 by the end of 2002. Okay, I think we've all understood that. 2003, 4, and 5, we've had up, up, up. So our $100,000, which was down to $62,000, grew back to about $100,000, $98,000. We are still underwater after 6 years. No one denies that. No one denies. That's the nature of the stock market. Fast forward to 2006 and 2007, we're back up above 100,000. So in 2007, we're now back to 120,000. So we're back to where we were. We've made money. Now, if we kept in there in 2008, which you should have, you got hit hard. You're back down to $75,000. 2009, you're up 28%. 2010, you're up 17%. You're back up to 114. That's it. So where's the 2013? That's reinvesting dividends. Are you not reinvesting dividends? Why would you not do that? I don't even know what not reinvesting dividends. I don't frankly care. If this is a portfolio of stocks, you're trying to get growth, you're back to where you started. Essentially at the end of 2009, by the way, but we'll just say 2010. Yeah, it stinks. Yeah, 10 years you didn't make any money. I'm sorry to say that stinks. If you're expecting the stock market to give you money each and every year, you're wrong. You're investing incorrect. That's not how it works. That does stink. We're in a bear market now. That stinks. That's the nature of the equity markets. And the nice thing about it, my friends, is we have proven. I don't know where it will go. I have no clue what the future holds. None. You could lose everything. You could lose everything. But I do know, in the history of the world, if you invest in the stock market, the U.S., I hate to even say stock markets. People think it's a gambling enterprise. It's not. You're investing in the companies, many of which you frequent daily, all the time. As a publicly traded firm, you're taking advantage of the dividends and the growth that these companies offer. It's wonderful, my friends. You don't have to have a top hat, be a monopoly guy. You, just regular Josh, can become wealthy by doing this and sticking to it year over year over year. In this case, we're diversifying our portfolio along many different companies, some of which will go kaput. Sometimes the market will kill us. More often than not, historically, the market has done better and has done worse. It's just that is all there is to it. So reality needs to come in and give you a splash of cold water on your face to recognize what investing is. If you're going into investing and thinking that you're going to make it, you have some trading strategy, don't bother. Just go to CDs. There's nothing wrong with that. Go to government bonds. If you go into investing for the right reasons, the likelihood of you making money is quite high. I will never guarantee anything because we could get duped tomorrow. Thus, I can't guarantee what the future holds and you can't either. But I can tell you, historically, nothing has proven better than good old-fashioned capitalistic. And again, I wish we were more capitalistic here in the United States, but we aren't. But it's the best thing there is. The only game in town when it comes to the ability of regular folks to make money and increase their retirement plan, to save for their college education, to give money to the church. It's a wonderful thing to behold. And now that we're in a bear market, let's clean out some of this negative naysayers, let them go and say, I told you, okay, let's get back on it. Now's not the time to start getting squeamish because that market's already down. If you start pulling out now, man, where were you? Who was calling a bear market in September 2018? All right, so don't forget to subscribe. We'll see you next time. Thanks, guys. Bye.